depreciation question where we are going to solve this. This is from one of the past papers. On 1st April 2017, Rosa purchased 2 motor vehicles costing 50,000 each. On 1st January 2019, she sold one of the motor vehicle for 33,500. The sale proceeds were received by check, and then depreciation is charged at the rate of 20% per annum using reducing balance method. Okay, a full year's depreciation is charged in the year of purchase and none in the year of disposal. Prepare provision for depreciation motor vehicle account for the year ended 31st March 2019. Now, balance the account as on that day and bring the balance on 1st April 2019. So by this itself, we know that the financial year ending or the accounting year ending is 31st March 2019. We need to work on that first. So they want us to prepare for 31st March 2019. That means from 1st April 2018 to 31st March 2019. So that is the year. I always write it down here for myself so that I don't forget that which year I'm preparing it for. So I'll write here 1st April 2018 to 31st March 2019. Okay, this is the financial year I'm making it for. Now we proceed, just a second. So we will proceed with this 31st March 2019. Now we will proceed with this. First of all, we have to find out what is the opening balance. So opening balance should be here on 2018 1st April, and it will be always balance brought down. What should be the provision of depreciation balance brought down? Now we have to work on, this is the financial year ending for us. On 1st April 27, so 1/4/2017, 2 motor vehicles were there. Let's say A and B. So one was 50,000, the other was also 50,000. On 1st January 2019, she sold one of them. That means this was, we have to charge depreciation till 31st March 2018. Depreciation at the rate of 20% reducing balance method. So 20% of this is 10,000 depreciation, and this also 10,000. Because this is sold on 1st January, that means next year. So my carrying value is 40,000, and here also is 40,000. And when is it sold? On 1st 1/1/2019. Let's say this is sold. One of them is sold for 35,500. This is a sale price. So depreciation in the beginning, that means on 1st April 2018, depreciation was 20,000. And then one of the vehicle which is sold. So this is the depreciation which we have to take it at on the date of sale. So on the date of sale, that means on 1st January 20, when is it sold? That is what we have to think of. So on 1st January 2019, so 2019 1/1, it is sold. So we'll say disposal, and it is 10,000. So we will go to disposal account. In disposal account also, and 2019 1/1, 1st January, and I'm going to say provision for depreciation. Provision for depreciation 10,000. So both have the contra entry, the dual aspect, one debit and one credit, and then followed by we have to calculate the depreciation for the remaining motor vehicle. So what is remaining over this is this. So the depreciation for this is 40,000. Depreciation for 1/4/2018 to 31/3/2019. This depreciation is 8,000 at the rate of 20% on this, on the carrying value. So we will charge your depreciation. We will say income statement 8,000. What is the year? Should be end of this year. So we'll say 2019 31st March, right? 2019 31st March, and then that is the entries here. So we'll total it up. So we get here 28,000, and this also 28,000. There'll be a balance on 2019 31st March. Balance carried down would be 18,000, and here 2019 1st of April balance brought down 18,000. With this we complete this. Let's come to disposal account. In disposal account we always write on the date of sale. So 2019 1st January motor vehicle, because that's all at the cost we always take. So we say motor vehicle, the one which is sold, motor vehicle 50,000, and then he sold it for 35,500, and then on the same day we can write cash book 35,500. All right, now we will total it up. There is never balance carried down or brought down here. 50,000 and this 50,000. There's a difference on the credit side of 4,500. That will go to income statement. Income statement. That means there was a profit on sale, because it's on the credit side here. It is going to be a debit side. Debit side. That means there's a loss on sale. So you can write here loss on sale. This is loss on sale, and the date should be 2019 31st March. This is how we'll end this question.